the real price of silver is much higher than it's being sold for. That's the truth of it, because they've done a real good job at holding it back. And so what is the price discovery? I don't know. But I guess really what he's saying is, what does that mean for the economy? I think it means trouble ultimately. It means inflation. It means if you hold your wealth in dollars, you're in trouble. I think you will lose purchasing power rapidly. But yeah, again, we're a resilient country, and let's just hope that he can unify this.
Can you explain for the less scholarly people why cutting of interest rates by the Fed is going to cause the economy to crash?
Well, because you have, some people call it bond vigilantes. They cut the federal funds rate, which is the overnight rate. It's the front end of the curve, the shortest duration, and they try to bring down the short duration treasuries. At the same time, the back end sells off, because the back end, they're selling bonds, and as you buy bonds, as you buy them, then interest rates fall. As you sell them, interest rates go up, and what you're seeing are people selling 10-year treasuries, governments selling 10-year treasuries. They don't want to hold it because they believe inflation is only going to get worse the way that they're doing things. By lowering rates, this is a form of stimulus. It creates a weaker, less purchasing power for your currency. His policies are very inflationary, and the bond vigilantes, or whoever it is saying, I'm not going to hold your 10-year treasury at this rate. We demand a much higher rate. And the 10-year treasuries, if you look at, since they've decreased the front end of the curve by 75 basis points, 50 and 25, the 10-year treasury is up over 90 basis points. It's gone the other direction. And the 10-year is what all the banks hold. The 10-year is what the mortgages are based off of, what credit cards are based off of, the refinancing of all the commercial real estate loans. It's putting tremendous stress on the banks, especially. And, the banks you look at Bank of America, it spent hundreds of billions of dollars on treasuries, short term. I don't know if they were 10-year. I think they were at under 1%. That when the rates were down to zero, and now they've been eviscerated as rates have gone up to 4+%. They're down 10 times or more what they were worth. And it puts great strain on the system, because a well-capitalized bank, for example, according to the Basel III regulations, they have to have 4.5 cents on the dollar. During the pandemic, it was zero reserve requirement. So 4.5 cents on the dollar, if there's a run on the banks, which I believe there will be. After what we saw at First National Bank of Lindsay, Oklahoma, it's the first bail-in we've seen since the legislation was written, where half of the uninsured deposits are poof, they're gone. And when you see, I think, more bank issues as the overnight reverse repo market has been drained down and the BTFP program is over, this was the form of liquidity to these banks that has now been yanked. They have to sell their assets, which are 10-year treasuries, which are worth less than when they bought them. And that's what realized gains become, or losses, instead of, the unrealized losses that the banks are drowning in. And so as rates go higher on the 10-year treasury, as they try and push down the front end, no one wants to hold our treasuries of any duration. I've said it. They're uninvestable when inflation is running much higher than they're telling us. John Williams says it's 11%, not the nonsense 3 that we're talking about. So if that's the case, why would you hold a 10-year treasury if you understood inflation is 3 times the yield? You wouldn't. And so that's what they're saying effectively, is that we're going to sell bonds and push the back end up until you pay us more for holding any duration for all of the risk associated and the inflation. So the problem is that the entire economy really is based off of, or much of it, off the 10-year treasury, especially the banks. So as those rates go higher, remember what happened when the 10-year went to 5%, you started to see the banks blow up. Well, if all of a sudden no one wants to buy our treasuries anymore for these reasons, and rates start to go up and up and up and up, you'll see banks collapse. You'll see commercial real estate explode. And that has a reverberation, and the systemic nature of the banks that are connected the way that they are very quickly can create a very scary event. So it's counterintuitive when you think, well, they're lowering rates, so isn't that good? Um, it's really not good. You're lowering rates when you're 65% away from your target rate of 2%. So you didn't beat inflation, you waved the white flag. You're lowering rates when stocks are at all-time highs, when cryptocurrencies are at all-time highs, when real estate is all-time highs. This is the same mistake that we've made forever, where you mess with Mother Nature, you mess with interest rates instead of letting the market dictate where they should be. The Fed does it, and it creates all of these distortions and misallocations and the price discovery in all of these assets where the price to earnings ratio is way out of whack and the prices are so high and only going higher. At some point, that is only going to get more difficult as rates move higher, let alone financing the debt, let alone all of the commercial real estate resetting. So it's a scary thing. And it's basically the market's way of saying you're trapped. Either you deal with these things and deal with austerity and reining things in and paying the piper, paying your bar tab, or you continue to do more of the same that all politicians do, and that is to choose inflation and suppression of interest rates over making the tough decisions. We can do it longer than most people or most countries because we're the world reserve currency, but we're at that point where we're struggling to meet our interest obligations, and that's when empires fall. We're very close to it. I mean, if by 2031, according to the Congressional Budget Office, which is a nonpartisan deal that all of the tax revenues go to just to pay the interest on the debt and the mandatory entitlements, which aren't even on the balance sheet, they're unfunded liabilities. So that's not even part of the 36 trillion. That's off balance sheet. 99 trillion shortfall in Medicare Part B, 22 in Part D, 77 in Social Security. How do you do that? Even with a balanced budget, even with trimming all of the fat of the government, you still got the same problem. And so as they continue to push down rates, which only blow up asset prices, create a weaker dollar and more inflation, people say, I'm not holding those 10-year treasuries. We demand much more. And you get to a point where it starts to break the economy. And we're not that far away from it, actually. So if there is a deep state and the deep state wants to mess with Trump, it would be with the banks. It would be with letting interest rates spike somehow and blow up the banking system and the systemic nature of it all with bail-in legislation that no one knows about is a very frightening thought experiment. So it's as crazy and doom and gloom as it sounds, it's really not that preposterous, actually.
We've talked about triple digit silver for years, and the reasoning behind it is not that crazy. If you have, the gold silver ratio just fall to where it's been before, you have $100 silver, and more than that. So these kinds of things aren't that crazy, but it does kind of make you think, if we do see a world with, $7,000 gold or $100 silver, what will the economy look like? And maybe our last viewer's question can be that, can an economy still work well if silver rises to over $100?
I mean, who knows what that means? Because who knows what the real price of silver should be? It's been held back for so long. What does that mean? Certain things will cost more money, but again, if you make an iPhone that needs a fifth or a quarter of an ounce of silver, you don't care what silver is. You buy it, you accumulate it, you need it for your product. The bigger question is, what does the dollar look like? And I think it's important to understand. I mean, let's just do a thought experiment. In 1964, gallon of gas was 35 cents. That's when silver was in the coins and in quarters and dimes, which, right now is roughly worth 20-ish plus times the face value. So 35 cents today, if you use just the melt value, is over $7. For a dime and a quarter pre-65, cost of a gallon of gas is $3.50, $4. So that dime and that quarter buy you 2 gallons of gas. That 35 cents wouldn't even buy you a drop of gas. So when you pull the real money out of the currency, this is what happens. You can look at the price of gold. And 10 years ago it was $1,200, and today it's over twice that. The dollar with money creation running at 7% per year on average for the last 10 years, 7 into 72, which is the law of 70 seconds, says that in 10.2 years, your principal would double, or in this case, the dollar would be worth cut in half because at 7% money creation, which is inflation, you are inflating the money supply by creating it, and everyone thinks it's rising prices. That's just a symptom of it. But all of the money creation at 7% per year means 10 years ago, our dollar bought twice what it did today. So did gold go up by over 2 times, or did the dollar lose half of its value? When Trump took office in 2016, gold, I think, was 1,600. And so here we are over $1,000 higher. Little by little, it's been creeping up. And at the same time, the value of the dollar has been decreasing. So ultimately, yes, we could see an environment where the dollar loses purchasing power. That's what typically happens when you drop interest rates. And he advocates for a weaker dollar. That's what he wants. So, who knows? I would just simply say that the real price of silver is much higher than it's being sold for. That's the truth of it, because they've done a real good job at holding it back. And so what is the price discovery? I don't know. But I guess really what he's saying is, what does that mean for the economy? I think it means trouble. Ultimately, it means inflation. It means if you hold your wealth in dollars, you're in trouble. I think you will lose purchasing power rapidly. But yeah, again, we're a resilient country, and let's just hope that he can unify this country. I think even the Democrats are seeing that the moves that he is making they're revolutionary. He's getting rid of the retreads. He's bringing in young people, an average age probably about your age, or even in that range, and in their mid 30s and early 40s, and bringing in people that were successful in the real world. And so all of these things are very positive. But here again, his policies will be ridiculously inflationary, and we must go through a period of very difficult times. And I think that comes at the expense of the dollar. That comes at the expense of inflation. And I think the way to get out of the way of this is to hold tangible assets. I mean, look at, for example, Bill Gates. What is he? He's the largest landowner in the United States. Not to say that land isn't going to get hit, but it's something that will come back when we get through to whatever that means. And I think holding commodities and assets is very, very important right now, and mitigating your exposure to traditional assets. And it's like Adam Lipinski. I keep saying this. It's very ominous. Adam Lipinski, the head of the Polish National Bank, says when someone shuts off the power to the global financial system, which is based upon electronic accounting records, this is why Poland holds gold. They've been buying more than anyone the last few years. What the hell does that mean? Why would he say that someone's going to shut off the power to the global financial system based on electronic accounting records? And when the whole thing goes poof, well, we have gold for that. I mean, are these things possible? Who knows? But I think you hold gold and silver right now, and you worry less about what the world looks like when this all blows up, and be more thankful that you've gotten out of harm's way. I do believe that if you hold all of your assets in dollars, you're in trouble. And if you hold lots of money in the banks, you're in trouble. What does the systemic nature of all of this look like? I don't know, but I do know in my heart and soul that we have a good deal of mud to go through to get to the other side. And I'm optimistic if he does a really good job, we might have Republicans in office for the next 12 years, which will hopefully get us to the point where we can all be proud of this country again. And maybe at that point, I'm telling people to sell gold and silver. I don't know, but we're nowhere near that point right now.